Good afternoon, people. So, thank you for joining today's webinar. On crafting the ideal insurance portfolio for financial security. Um, Moving on, we have a first slide here. So, why you need an insurance portfolio? So, why you need an insurance portfolio? So first of all, we know that we need we all try to build our ideal financial portfolio, right? So what we do there? So basic thing is to understand the importance of having a well-rounded financial portfolio. So that includes various investment avenues. For example, you hold cash for your emergency needs, and you invest in mutual funds and stocks and real estate, both for income generation and capital appreciation purpose. And also, we do have gold and silver as a part of our hedging process, right? So all this makes an ideal financial portfolio, and we all try to make a perfect fit out of it. So similarly, we have ideal insurance portfolio wherein we need to cover and you have home insurance, you have critical illness insurance. When you travel, you go for a travel insurance. And so this brings us to the importance of an ideal insurance portfolio. So basically, in the world of financial planning, an ideal portfolio is like well orchestrated symphony with each instrument playing a crucial role, right? So just as cash, mutual funds, and real estates, these form the foundation of financial portfolio. Insurance provides the necessary protection and safety net. So know your needs. So, in case of life insurance, let's start with life insurance, okay? So, this is like a cornerstone of financial security. So, in India, you should understand and calculate your human life value, which is very important and which is very pivotal. Your HLV is the present value of your earnings, and it's formed the basis for determining the right amount of life insurance coverage. So, even we all know that only 1% of Indian population is insured, which means that 99% of the population remains uninsured, right? So we need to know that are we in that 99%? If yes, definitely it's time to take action. So what should you do? So here we have life insurance and general insurance, which combines and give you an your insurance portfolio, an ideal insurance portfolio. So we know that significant portion of our population is underinsured. So there is thing called you are not insured at all and you are underinsured, which means we have a lot of policies which wherein we are not adding up the HLV there. We are just going and buying a product. And we should understand that insurance is something for financial security and not a return promising instrument. It's not an investment instrument. It's basically a financial safety net, financial protection purpose. So the third one is general insurance. So moving on to general insurance, which covers assets like home, motor, and health. India has witnessed a rise in natural calamities and health-related issues recently, and therefore we have to have a general insurance, which is not just advisable. Now it has become essential. And consider the rising medical cost of India, whether it is a medical cost or you can say whether it is the rising because of climate change. We need to have home insurance or motor insurance in place, and at the same time considering rising medical inflation in India, this medical insurance as well as you have home insurance in place. in order to, also personal accident insurance. These all act as a financial shield against unexpected expenses that can occur in future. So then we have to quantify our requirements. Now we know that we need these kind of insurances in place. So now we need to quantify how much insurance you need as a coverage. So be it for general or for life. How do you calculate it? So when deciding on life insurance coverage, we have to consider our current expenses, family's expenses, and future goals. So let's take an example. Let's consider our annual expenses around 10x. So you have dependents for near, next 11 to 12 years. Financial dependence, basically. So your life insurance coverage should ideally be X times Y. So, for example, for general insurance, you can calculate how much you might need to pay from your pocket in case of an unforeseen event. So, for instance, understanding the repair or replacement cost for assets covered under home or motor insurance. So, so any mishap that in case of a mishap, you need to have a cover in place. So to quantify it, we need to consider human life value in case of life and how much will be paying out of pocket. We need to calculate that also. For example, repair or replacement cost in case of home or motor insurance, and at least a basic cover, health cover in case of general insurance. So then now I'm handing over to Mr. Swagat.
Thank you, Archana. So I'll just take over from here. So we'll just break down the insurance. So as Archana said, we are breaking down the insurance as life and general insurance. And under life insurance, we have this term insurance, which is the most important insurance of all. And this is considered to be the pure life insurance in that context. First is we are segregating term insurance audience as to one is salaried and one is self-employed. So for salaried, what are the reasons they should take a term insurance? First is they will have financial dependence. For example, obviously, let's say you've started working and you've started providing for the family, and they take a part of your salary as their expenditure, to run the family. Then they are your financial dependence. It can be your wife, your mother, your father, or anybody who's dependent on you financially. They are your financial dependence, and that is one important reason you need to take a term insurance. Second is you will have a higher loan. So say for example, again taking the previous example as as the example, uh, after going to this, after getting salary, after providing a family, you might want to go for a home loan. For example, let's say 5 years, 10 years down the line, to build your own dream house. Then you will opt for a home loan. So this term insurance value should also include your home loan as value as part of the value of the term insurance. So you can have multiple covers, for example, in that case. So this hormone is very important and it has to be included in your term insurance value. Third main reason is that if somebody does not have, somebody has very less assets or somebody do not have any liquid assets at all, then they should have a term insurance. So what is liquid asset in this case is, they don't have adequate cash balance in their bank account, they don't have mutual funds, adequate mutual funds, or they don't have any financial assets. So those are considered to be the liquid assets, which can be easily turned into cash in cash, right? So that's called liquid assets. So if somebody has a very if somebody has adequate asset, for example, they have a 5 crore worth of real estate, but imagine, in case of their demise, right, the family cannot sustain with that house alone because they'll not be able to sell it off very quickly. So they need to plan for adequate liquid assets also, like cash, something, those examples I told, so those are also to be planned, right, as part of term insurance, and the term insurance has to be taken that way. So these three are the main reasons for a salaried person to consider taking a term insurance. Next is coming to a self-employed person. Again, financial dependence, plays a major role here. And then they would have additionally, apart from home loans, they would have bought business loans also. And since they are self-employed, their business and them are not separable. They are inseparable in that sense. So business loans are also have to be considered in some cases. And so and then, as I told you, less and no liquid assets are to be considered. Fourth important point is for uh, for the spouse if he or she is part of the business. So let's say I run a business and I have to take a term insurance, but I also included my wife as a partner in my business. Then I'm in a way or other I'm dependent on her financially. So she also has to I have to assess the value. I have to understand whether I have to compute the value by the help of human life value. Then I need to understand that she or he has to take that term insurance, so that in case of any unfortunate event, that is also accounted and that is also helpful in running the family without any hindrance. So this is the basic or main bifurcation between a salaried and a self-employed person. Next is coming to a health insurance, how it differs from a salaried person and self-employed person. First is for salaried person, the main advantage would be, the employer will provide a coverage in most of the cases, like 95 percentage. The employers provide a coverage to the employees, and in most cases, their family is also covered. Right. Second is personal health insurance plays a major role because once they become a self-employed person, once a salaried person becomes a self-employed person, then their health insurance will go off. They will not have any health insurance at all. So taking in spite of having an employer coverage, they need to have a personal health insurance, and it should they cover their family as well. And more importantly, if they have senior citizens, then it should cover them. And how it should cover is that it should be as per their requirement, and it should also take into their account, their family history, medical history, I'm saying. And then third is, they have a top up option. Once they are adequately covered with employer coverage plus the personal health insurance, they should also consider after say 1 or 2 years or probably 3 years down the line, they can take a super top up options. They can consider that. But then their base health insurance should be at least for a 15 or 20 lakhs. And it also depending on the family members' size and medical history. So all these things have to be considered if you're a salaried person. If you're self-employed, then the main disadvantage will be you will not be covered by your employer because you yourself are the employer for yourself. So you will not have an employer coverage. So personal health insurance is the only choice of health insurance that you will have. Yeah, personal health insurance is the only choice of health insurance that you will have, and you will have to consider your family, number of people in the family, their medical history, and everything, and have to take appropriate actions as per that. Next is again super top up option you can consider taking after you have taken a good value of base health insurance policy. So I hope I'm clear with these points. Next, I'm moving on to critical illness insurance. So yeah, critical illness insurance, I think many of you will know, which is exclusively for critical illness, in critical illnesses. And there are like many list of critical illnesses, and this critical illness insurance will cover that. And in most cases, or in 95% of the cases, the critical illness policy will provide a lump sum benefit in case of the diagnosis of any of the critical illnesses. Right. So you can consider taking this, and then there are like two types of critical illness policy, that are available. One is with the term insurance, where you will face the option of premium efficiency, or your premium will be uh, it will be cost effective. At the same time, it will cover most of the illnesses, right? But there is also one more option called standalone critical illness, right? Which will cover which will provide you a very comprehensive coverage, as well as this will come with you lifelong. But then you can take a call, and it's very subjective case because many would stop with only a critical illness that's taken with term insurance. Some people would also take additional critical illness with the standalone health insurance company, and then some people also plan it with a medical emergency or medical reserve. So all these things you can consider, and you can probably, if it is 100%, 35% you can allocate here, 35% you can allocate for like standalone critical illness, and then 35% again, or 30% you can allocate for your medical reserve. You can start building from now. Say you have retirement in next 30 years. From now on, you can start planning for that, here and there by probably making a SIP or something. Next is personal accident insurance. So again, this is very different for a salaried and self-employed person. And even for a salaried person, it highly depends on their occupation style. For example, say someone is from a white collar, job profile, then taking a personal accident will be, very easy for them because it does not entail any risk in their occupation, right? Physical risk I'm talking about. Whereas for a blue collar or for someone who works as a daily labor, or for someone who works in coal mining, or someone who keeps traveling, back and forth very often, then for them personal accident is very very important because the chances of them meeting with accident is little higher. So they must prioritize that option as well, and they should take for adequate value, because end of the day personal accident will create a bigger impact, in and major accident in their life, financially and physically and emotionally as well. And it also stops the income if you are the main breadwinner of the family. So it disrupts each and every finance that takes place, or which you would have planned. So taking this personal accident insurance is also very important. And our suggestion would be to, suggest, so we would suggest a standalone personal accident policy, so that, you are covered 360-degree. It will cover you, you know, uh, your death. It will cover your disability. There are like 3 to 4 types of disability. It will cover, some more points as well. Next is home insurance. I think this home insurance would have been would have been a very popular topic in this latest Chennai cyclone issue, which happened 2 weeks back. And many people would have lost, your personal belongings, or, and some of you might have faced water logging in your areas, and even some more people would have faced, water entering your house as well. So why home insurance is very important is that it will cover your home, which is the structure, the building, and it will also cover any loss that is happening to due to any natural calamity or any fire accident that is taking place. For example, let's say in the cyclone, if somebody has lost their, any electronic items or any personal belongings, right? So we'll be able to claim through this home insurance. And waterlogging is one of the main issues many people face. So for those kind of damages also, home insurance repays you, right? So that's very important to have a home insurance. And there is also one more latest article that said only 1% of Indian homes are only insured as per Indian insurance market, whereas France or Australia has 97% of the people they have covered with home insurance. So look at the difference between us and the other countries taking home insurance. And this is very important, and especially with the climatic changes and everything, this home insurance's importance will grow only. So it's very, and coming to the price of the home insurance, is very cheaper. You can take it for like 3 years or 5 years or even 10 years together, in the first year itself. And for a year, let's say if somebody is taking insurance for a 1 crore value, the premium will be somewhere between only 10,000 or 12,000. That is the range you can expect. So the home insurance is very cheaper. At the same time, it's very effective also for somebody who faces these kind of issues. Next is travel insurance. Again, it's very subjective case, but then many people, I've seen many people, especially while taking health insurance, they would also opt for a global coverage by paying extra premium. But we wouldn't suggest that, because you can just take a travel insurance only if you're traveling for like 20 days or 30 days in a year. You can just take a travel insurance, and this travel insurance will cover you for the hospital expenses while you travel. It will cover for the lost luggage. It will cover for flight cancellation, other losses when travelers, what the travelers are facing, right? So instead of taking a health insurance, that covers globally, you can just offer a travel insurance, and you can have a basic health insurance in India. So so that you are sorted. At the same time, you're planning your premiums very effectively. So that will be the best option. And for somebody, especially taking the case of self-employed or a business person who travels very frequently, they can probably take a annual travel insurance, or they can take a multi-trip travel insurances, which are very effective. At the same time, their coverage is also very comprehensive. So those are the options you can consider. So I think I was able to put out the points very clearly. Uh, I wish Archana can take this from here.
Thank you, Swagat. So now we have seen various insurance that has to be in our portfolio. let's understand the importance of a periodic review. So we know that insurance needs are very dynamic, right? So this evolve with time and life events, especially in India, because we have cultural dynamics that often lead to significant life changes. So maybe be it a marriage or starting a family, these milestones warrant a reassessment of your insurance portfolio. So consider this: when you were a bachelor, your insurance needs were different from what they are now post marriage. So periodic reviews, especially every 3 to 5 years, the needs and requirements should evolve with time and at different milestones. So in periodic review is very necessary, crucial to align your insurance coverage with your changing circumstances. So as I said earlier, our insurance needs would be radically different from time to time. So it's vital to periodically review it and make the changes whenever and where required. And at the same time, this periodic review will also help you to plug the loopholes in your existing portfolio. So either you can add new products or forego the ones that you don't need. So this exercise every in your life, this will bridge the gap between your actual insurance needs and the shortfall promptly. After all this, we have our action points. What you need to do in order to have the ideal insurance portfolio with you. So first is know your requirements. So we have life insurance, health insurance, and other general insurance in place. So you have to know your requirement and quantify those requirements. In case of life, human life value needs to be considered whenever you are taking a policy, and it needs to be reviewed. Periodical review should be there every once in 3 or 5 years, or at the case of any life changes. And understand product requirements, wherein Swagat has helped you gone through all the significant insurance that you need, insurance and motor insurance, which required significant, which got significant attention during this Chennai flood time. So we have to understand the product requirement and periodically review it also. When you follow all these points, you can build your ideal insurance portfolio. And we need to understand that insurance portfolio it will not remain constant. So once you take it, it doesn't end right up there. So definitely you need to review it, and it's very dynamic, so that you need to go for term insurance as well as other general insurance.
So one more important point I would like to add to Archana's points, which is especially with term and health insurance, one may need to take a term insurance. There are like multiple occasions they will have to take, but then to be more specific, it will be once they start earning and support their family. Second case, it will be once they start once they start their own family after marriage, and then third will be once they have children, and then once they go up the ladder in their financial career, so professional career. So these are the 3 to 4 stages in life they need to upgrade their term insurance and keep reviewing once in 3 years. So that's the point we are trying to make. Secondly, also with term insurance, if somebody feels that they've already have adequate retirement corpus and they wouldn't need to carry this term insurance anymore, then they can just stop paying the premium, so that they feel that they don't have their family members are not financially dependent on them anymore, and basically they can just take care of the other insurances portfolio as well. So that's the point actually we wanted to add, apart from what we projected. Uh, so you can actually, we are done with the session, so you can ask questions and we'll be happy to answer. So we have provided our number in the chat. So you can note down the number and you can reach us also private to discuss about your portfolio. The same time, so we'll be happy to answer or check how well you're doing irrespective of irrespective to your portfolio. At the same time, in case you have any questions, you can type in here and we'll be happy to answer. Yeah, thanks for your feedback and thanks for attending too. So we would be happy to do more webinars in the coming days. Thank you so much.